what we're going to be simulating today, and I'll just explain what we're simulating and then go back to our participants. You'll see in this diagram I sent around the pack yesterday just exactly what's happening in this particular flow. Why we're doing the simulation today is really interesting, and I'll probably let Amy comment later. But when variation margin is a problem in the industry, so if you look at some of the stats in the market, so I think Oliver Wyman actually said that asset managers and banks could probably save around 150 million a year just in better collateral optimization. And if you look at variation margin on a whole, it's hugely inefficient, very manual, and actually you see a lot of trapped liquidity, whether it's in custodians or markets or effectively within silos. So for the demo today, what we're going to be doing is showing how a variation margin from Commerzbank to UBS is rehypothecated. And rehypothecation is like that magic word that everyone talks about but rarely ever shows. But actually, we're going to show it today. So UBS is then going to enter into a 10-minute repo with State Street. And that repo is going to repo out the UBS money market funds. And this could be one fund, it could be a portfolio of funds, but for today we're showing one fund. And against that, there's going to be a delivery of dollars, which is from Finality central bank money. So for me, this is like the holy grail. This trade is going to, first of all, settle in under 2 minutes when it gets funded. And it's going to be an amazing technical proof of what we can do in the future of liquidity management. So real assets, real institutions, and we're seeing real efficiencies all come together to show how that collateral can be unlocked going forward. So with that, I'd like to say who we've got involved today. So as always, we've got our friends at Zero Beta that have done the margin calculation for the variation margin. We've got Commerzbank, UBS. Fireblocks is providing the wallet infrastructure for all of the wallets and the key management underpinning it. In the live UATs and actually production trades, we can actually substitute Fireblocks for any other key management solution that you want to use. We've got our friends at Finality and HEDERA involved in the cash leg. UBS is it's UBS's Finality account. We've also got State Street that's acting as the repo counterparty for the repo leg. And we're using for today's simulations the UBS asset, which is on Ethereum, and then Finality is on Hyperledger Bayesian. So again, cross-chain interoperability is being demonstrated, cross-chain solutions are being demonstrated, and we're actually using today for the repo leg a connection to fixed gateways as well to show how systems, traditional systems are going to interact with the new blockchain-based systems. I'll just run through quickly what we're going to show. I'm conscious of time. And these are the steps that we're going to show. So we're going to kick things off with Commerzbank receiving an initial a variation margin call from Zero Beta. That's been pushed into the system now. And Poonam, Andreas, you should be able to see in your collateral manager a variation margin come in. Yep. If you want to share your screen, Poonam and Andreas.
Yes, sure. Can you see it?
Yes, we can see it. So this is an easy one for you today, Andreas. You can click this one. Yep.
And I don't have to type an amount at all, so that's saves my life. So I confirm, right?
Yep, great. And then Rajat, on the other side of the trade, you're receiving that as collateral. If you then confirm that one on your side as well.
Sure. Hope my screen is up.
Just coming through, I think. Try it. Yep, it's coming through.
I'll just approve this.
Great.
All set.
Great. So just as we've done before, I'm going to just show you the proofs that that transaction actually settled on chain. I'm going to take back the share. And you'll see here, this is the transaction that we went, which was just done. I'm just going to refresh it. It will have completed in seconds, as we've seen previously. If I click on the transaction, it gives me a transaction ID, which I can then see in Sepolia, the transaction hash, and it will show you the proof that this asset actually moved on chain between the counterparties. And you'll see where it went from and to whom, and it's all been demonstrated here. So that's really cool. We've seen this before. This is not new. It's almost this is the easy step now. Now we're going to go into the repo leg. So I'm actually going to get Rajat to show what his interface looks like. I'm going to just stop sharing for a repo transaction. So a repo transaction is normally initiated through a TradeWeb interface or a GLMX interface, or maybe it's an internal proprietary interface. So this is where the trade would be negotiated between parties. And you would create the trade, the repo trade here. So Rajat is actually going to enter in all the details. We're going to start the repo at 11:40. We're going to end the repo at 11:50. So we're going to do it for 10 minutes. The counterparties are going to be UBS Securities. So the borrower is UBS Securities. And the lender is State Street Global Markets International. I'll just choose State Street, it's fine. Yeah, there we go, that one. Sorry, yeah, my bad, it's the wrong one. The amount is we're going to borrow an amount of 9,500,000 because of the haircut. So we've got 10 million of collateral that was originally posted, and we're going to apply a repo rate of 6%. Sorry, it's 9,500,000, yeah.
You can start it slightly later because you're already at 40.
Yeah, no, we will do, Ami, that's fine. Thank you. The repo rate is 6%, and the collateral is going to be the UBS money market fund, which is scroll down to the bottom. It should be there. Yep. Great. What you'll see here is the interest is being calculated to the minute. Obviously, it's a small number for this particular repo. In the real life scenarios, these will be much bigger numbers, but you can see it's actual interest calculated to the minute. You can select now on the last tab, or last box, sorry, that you're going to choose your destination account for the cash as being finality payments, and that's going to be dollars. So with that, you would then send and click confirm. And
do I need to change the settlement time, or good to confirm?
Yeah, it's fine. It's fine. Just, yeah, it doesn't. This is then going to go into a fixed gateway, which I'm going to get Aran to show you. So if Aran, you share your screens now. This is more technical in nature, so some of you might like this. But we're actually going to show you how that trading interface then gets translated into a fix message, which is then going to go into the blockchain-based systems. So Aran is going to jump in now, and Aran is our repo expert. Aran, over to you.
Thanks, Natasha. Just making sure you guys can see my screen.
Yeah.
Cool. All right, so we're looking at the Ownera investor app. We have here the UBS investor looking at their portfolio. We can see that the balance in dollar coming from finality is such, and this borrower has also a balance obviously on the UBS asset, which is use this collateral here, which is as such. And then we can see the balance on the State Street, which has the cash in dollar, and they obviously do not have the collateral in ownership yet at this point. So now we're going to switch over to the fixed interface. So we're looking at the fixed client here that's connected to the Ownera fixed server. I'm going to be using a trade capture report message in Fix with the given commercials to book the trade, and then we'll see the orchestration of the trade on the Ownera routers. So the trade capture report indicates here that we're doing a dollar lending for the given collateral indicator on the router. So that's the collateral asset we're using. Trade date and value date is today. We settle it immediately. We are lending 9.5 million, as Natasha indicated, against 10 million in quantity in the collateral, which includes the haircut. And we are paying interest of $26.39. And then tag 118 here is the maturity closing amount. And here I'm indicating the settlement time and the maturity time for the repo. So we are saying that we'll start it at 10:45 GMT. Right, so this is GMT time, and we will end it at. Do you still want to go with 10 minutes, Natasha?
Yeah, let's do 10.
Okay.
Yeah, fine.
Okay, and we're gonna mature it at 10:55 GMT time. Okay,
Okay.
and these are the account indicators for the lender and the borrower in this case, which is UBS and State Street.
Okay, if you want to send that. Great.
Sending the trade. Okay. Now,
Does it matter that the times are different to the ones the UBS put in?
Yeah, so when we go into production, Andreas, it will be linked. So the demo system that we showed you isn't actually linked to the Fix GUI at the moment, but it will all be linked. So it will match exactly. It was just, yeah, for this demo, we didn't link it.
Okay, so we are looking at the orchestration. Let me just increase it a little bit.
Yeah, thanks.
We're looking at the orchestration plan for the repo, which essentially says we're waiting to settle. This is, by the way, my local time, but this is like 11:45 London time. Okay, and we'll wait for it to trigger it. It triggered now. The first step is we're going to be holding the asset on the UBS side. So we're waiting for that confirmation. Done. Now we're holding the money, which is the $9.5 million on the lender side, the State Street. So that's done in finality now. And we are releasing or essentially transferring the asset here, the 10 million of tokens, transferring ownership from the lender to the borrower. From the borrower to the lender. Second, it's transacting it on the blockchain. Okay, done. And now we're transacting the request to transfer the in finality the cash from the lender to the borrower, and that should be completed shortly. Done. Okay, so I'll move this aside. Okay, so essentially we finished with the settlement. If we're looking at the balances now, UBS has now received the 9.5 million in cash from the lending, and the balance for the asset was deducted by 10 million. If we look at the State Street portfolio, okay, so we sent the 9.5 million of cash over to the borrower, and essentially now received the ownership of 10 million in the asset.
Great, thanks, Eran. And we're going to actually hand over to the HEDERA team now, just to show what exactly happened on finality. So Pete and team, do you want to share your screen?
I can share.
Yep.
Hi, can you see my screen?
Yes, yeah, perfect, thank you.
So we are on the HEDERA DC Commander application, and here we can see on the balances for State Street, we can see that that balance has reflected on here with the 9.5 million that has gone through. And if I just go on to the transaction history view, we can see the view here with an update of the executions. I will go through to the records view as well. And here as well, we can see that the hold was created through the obligations, and here's just a status update showing that that has completed. A full view of all of the information is available on here as well. And moving on to UBS view, we can see here as well the balances reflected for UBS, and the same, just showing an updated view of where UBS is with regard to their activity, and the same, just having a view of the obligations view for UBS as well.
I don't know, Mo, if you want to comment in terms of obviously this being finality cash being settled at central bank level. I think it's really powerful to show that this particular repo was settled with central bank money.
Yeah, thank you, Natasha. So what makes Finality Payment System a unique cash leg in these scenarios is we're actually underpinned by blockchain technology, and all the balances of Finality are backed 1-to-1 by central bank reserves. So we basically tokenize central bank money on chain, and gives the participants the ability to settle with finality, deterministic finality on chain. But also it makes features which are not available today on central bank money, and for the first time ever, they're available that you can use the central bank money to settle with tokenized market. You can provide atomicity on a DVP and PVP basis, and it's 24/7, fully interoperable within the digital asset space. In this example, we use the Finality USD, but we're actually a network of payment system which are interoperated with the major currencies.
Great, thank you, Mo. And yeah, as I said, this is a really powerful demonstration because it just goes to show what's possible in this tokenization ecosystem with the interconnectivity provided by the participants. Marilise, you had your hand up. Question from you.
No, it was sorted. Thank you.
Okay, cool. Okay, so we do have a little bit of time before the repo then goes backwards. Anas, any thoughts to you as State Street? This was something that you were keen to show, and the possibility, the art of the possible.
Absolutely. I think this is one that we got very excited by. I think over this series of the previous simulations, we've proved out, the ability to post and subscribe to tokenized money funds, but from the sort of the seat that I sit in, well, we all know collateral is king, particularly so in repo markets, and being able to utilize tokenized money funds from just leveraging them simply as collateral, but then also for funding becomes very exciting. And I think this particular simulation, Natasha, is very interesting because we did the repo intraday for a fixed period of time, and I think this is a key topic that we tend to hear from market participants, which is, well, how can we better manage intraday funding needs? Are there opportunities for us to have reduced costs, i.e., move away from overnight funding rates? But then also, how do I, increase the pool of eligible collateral I can provide financing against? So I think this, tested, demonstrated across all of these very interesting verticals that we actively think about, and I think the market is very much exploring and looking for solutions.
Great, thank you, Anas. And I think also on we've demonstrated it today with a single asset. We're going to bring in other assets, and you can actually have those as pools, and also it will be possible to use the tokenized treasuries as they come through as well. So there's so much more utility that we see now with these assets that have been tokenized. Andreas, you have your hand up first. For your question.
Just wanted to point out again that State Street, UBS, and Commerzbank are part of the Finality Consortium. So it's pretty realistic that we will do once in a real life environment such a trade, such a setup. We will use that so it's not a sandbox fantasy show here. It's a pretty realistic scenario.
Yeah, I'm going to hold you to that, Andreas. We'll be doing it in December, hopefully.
Yeah, I'm making a note. That's 5 yards of balance from.
Yeah, exactly. Cool. And Adam, you've got your hand up.
Yeah, it was a question, or maybe a discussion point for Anas and the team. Have you also considered the RWA play on? Because it almost feels like you're switching UBS credit risk for central bank credit risk, because I'm no longer holding the cash and just setting it on a general nostro. From a UBS perspective, that's one of the angles we've been looking at as a benefit of finality. You know, you could argue UBS risk is similar to central bank risk, but then I'm slightly biased there. But fundamentally, like you see the angle, like that's one of the other benefits we think that you could tag on here, even on intraday liquidity. The RWA aspect is something to be considered.
Yeah, absolutely. I think it's one we didn't really touch on, which was the funding leg was done by central bank money, and I think it's a topic everyone thinks about as well. Can I settle using cash that I've got held in all of these different central bank accounts, and how can I bring that on chain? So definitely, Adam, I think it's one to be watched, and I think it's a very interesting one. I know finality, and there's a number of these central bank solutions cropping up. I think it will become more of a central funding leg that we tend to see. Does that mean a move purely away from the commercial bank settlement leg? I'm not sure.
Yeah, no, I'd agree with
I
that,
think,
definitely.
I think we'll always have sort of the agreements and the favorable terms with counterparties, but I think it's a no-brainer. I think the solution is definitely.
It's just another string to the bow. It's optionality that we all have the ability to play with from a funding and liquidity angle. Yeah, definitely.
Preben, I'm going to pause you a second because we have the repo reversing, and I don't want to miss this exciting part of the leg. So, Eran, can you share your screen now? 10 minutes. I thought you wouldn't. We'd have to fill 10 minutes, but you were great. There we go.
Okay. So, just on time. We're triggering maturity shortly.
There we go. It's done. Yeah. Refresh the screen, Aaron.
Yep. Triggered. Okay. About to hold the collateral on, which is an ownership now by the lender, of course. Second, it's transacting.
So I think I worked out it was 1 minute to go backwards, 1 minute and a few seconds to go originally in, and then 1 minute to go backwards. So let's see if it matches my times. Okay, so what's going on in the background? It is actually syncing with all the different applications in the background. So it's going through HEDERA, it's going through finality. It's actually syncing with the blockchain at UBS as well. So all of that is happening in the background. And hopefully soon it will release.
I just wanted to say a note on this. I don't know if you guys talked about it, but this earmark is the feature that underpins our interoperability. And this is actually what allows us to do all the atomicity. And, you know, from a cash point of view, now you have central bank money, you're putting programmability on top, and you're able to settle DVP in less than a minute. And we've done it in such a way that it's generic and it's standard. You know, whether it's Ownera or, you know, talking to anyone else, we've developed actually a standard protocol which works across different types of digital assets.
Great. I think around
yeah, completed the earmarking of the collateral.
Yeah.
Okay, money is now held. Okay, we're moving to essentially transfer ownership back to the borrower. Done. And then essentially we're obviously returning back the lending plus the interest of 2639 back to the lender. Done.
Right. And I suppose for Anas, that's free money. He wouldn't have earned that 26 dollars. He can go and buy himself a coffee today with the $26 that he earned for an intraday repo of that amount. But obviously longer term, there would be much more potential earning power for doing these intraday trades. Cool. Wow.
So yeah, the UBS investor received back the balance in the cash, and sorry, sent back the lending, and the UBS asset of 10 million is back. The State Street investor now received back the money plus the interest earned.
Nice, amazing.
Okay.
Amazing. This is fantastic, and just shows the power of these automated systems. Yeah, very little effort by everyone. And yeah, Previn, you had your hand up for
Yeah, I was just thinking about the business cases, actually. I think something Adam said sort of tripped off a thought. There's obviously the RWA positive impact because we're using sovereign risk profile money, which is obviously good. But other things that I think are worth just articulating a little bit more clearly are things like using the intraday liquidity buffer at your institution for a very precise amount of time, and also a smaller amount of time. I think those might be two avenues where the chunkiest numbers might arise when it comes to developing your business case and your net present value on these things. So I just think that we shouldn't underestimate what that speed means. It means we're not using the intraday liquidity buffer for as long. And we've got some evidence as well, because it's so well documented in terms of timestamps. We can go back to whoever we need to go back to in our institutions and say, look, we can prove this now. We can prove it is this quick. Can we please have a little discount on the intraday liquidity buffer, please? So, I think it's worth mentioning that. Yeah, so yeah, I just thought we've gone through these sorts of exercises before in the past, and I think we sort of glossed over some of these things. I think it's just worth bringing that out, because I think when it comes to time to doing that spreadsheet, that might be a good line item on the spreadsheet.
Yeah, great. Thank you, Previn. Andreas, your hand up.
Yeah, given that I'm based in Treasury, let me add some regulatory background on the whole thing. We were laughing a bit about the $26 interest rate, but it's a massive business case because of this case, the costs of intraday liquidity charged by Treasury towards the market department are enormous. It comes at a price in most institutions at the 1 year at the overnight rate plus a 1 year NSFR spread. So really long-term funding prices getting added to the cost, given that the trading department is utilizing this intraday portfolio every day. So you cannot fund it overnight, you need to fund it in term. And as it's a constant show going on, a permanent pledge, so therefore long-term funding is needed, and long-term funding is extremely costly. Second component is if we as Treasury could show the liquidity risk department that we are able to actively influence the peaks, or Adam is able in markets to flatten the peaks, he can by himself reduce the portfolio, avoiding any peaks in recycling, rehypothecation, reusing assets he already has within the markets department. That makes you a bit independent from the high Treasury charge you get. So over time, you could balance the peaks theoretically via having an active intraday liquidity trading in place. So if one has surplus and one needs something, it could be balanced via such a trade, and that would reduce peaks, i.e. would reduce the portfolio size you're getting charged. And thirdly, if you would do that euro against dollar, you could connect the euro liquidity intraday liquidity buffer with the dollar liquidity buffer. Let's assume they are both 10. If they could communicate with each other, you could demonstrate the liquidity risk department that not 20 are not needed anymore. You might be able to work with 15. Yeah. So that could reduce additional costs by demonstrating that surpluses in the dollar buffer can be rehypothecated against the euro buffer and vice versa. As a fourth point, we're having a very deep going on-site inspections by the regulator in Switzerland, in Germany, in Eurozone on intraday liquidity models. Yeah, that's the focus topic of the JST for 2026. So the front office rather comes up with solutions or the portfolio is further increased, ring-fenced, and whatever the regulator wants to. So after Credit Suisse and SVB, the focus of the regulator is intraday. And that's why these intraday cases in PVP and DVP popping up everywhere. Thank you.
Yeah, amazing.
Great points, Andreas. Really good points. All of those are valid, definitely.
Great. Anthony, you've got your hand up as well.
Yeah, you just have to forgive me for adding a couple of things. One reason everybody's so excited about all of these simulations is our commitment to take these onward to production. And I just wanted to highlight that all of that tech that Erin just demonstrated, all of the orchestration plans around orchestrating a repo transaction is now in production with our good friends over at HQLAX with JP Morgan. So with their JP Cash, their tokenized deposit account, that did over 5 yards in the first few weeks. So it's important to highlight that this tech isn't just lab tech. It's already hardened in production. We always design that tech to scale across different sources of cash, like finality for so you get central bank money exposure rather than commercial banks such as JP or others, and to different sorts of collateral. And I think the simulation today showing that you could take a collateral from another party, rehypothecate it in and onwards in other transactions shows the multi-party cross-market scalability of what we're doing. So we're very excited about it at Ownera and excited about taking these to production and not just for